It's Wednesday, June 28th, 2023. I'm going to share a few articles with you today. Please feel free to comment down below. We all love the comments. It's the best comment section in all of YouTube. It really, really is. And you have woken up so many people. So feel free to comment down below. I want to share these articles with you. Make sure you like this video. Make sure you share this video. And make sure you subscribe to this channel. Make sure you hit that bell notification so that you get the earliest updated video drops. So hit that bell notification. Jerome Powell, this is coming from CNBC today. Jerome Powell says more restriction is coming, including possibility of hikes at consecutive meetings. So we're getting more tough talk from Jerome Powell. Question is, will he back it up? Jerome Powell today saying at a forum that he expects multiple interest rate increases ahead and possibly at an aggressive pace. What do you think about this? Markets today, pretty flat. They seem to just shrug it off, shake it off, no big deal. I don't think the markets believe it. I think the markets still are hoping that this pause is going to last the entire year and that we're going to see some kind of pivot. It's not going to happen. I expect at least 2 more rate hikes this year. Let me know what you think. Is the Fed going to pivot this year? Are they going to keep the pause to the end of the year? Are they going to raise rates? I believe we probably have a 75% chance that July we're going to get a 25 basis point hike. And hey, we could get one in August too from what he's saying. So who knows at this point. But it is not going to do anything to help this economy while the U.S. government continues to spend money out of control as the Fed is raising rates. Here's one from the hedge. UBS to slash half of Credit Suisse's workforce as bank layoff tsunami worsens. They're going to lay off 35,000 Credit Suisse workers. I believe this was reported yesterday, but I just wanted to talk about this for a second. By the way, these cuts will begin at the end of July in London, in parts of Asia, and New York. But it is just another telltale sign of what is to come. We are seeing massive layoffs across the globe and right here in the United States. Ford being another one, Disneyland, the banking system, UBS, again, to slash half of Credit Suisse's workforce, half their workforce. That's a lot of people, 35,000 people. But we're seeing this every day. And typically, you know, we report on a lot of these big banks laying off or the big tech companies laying off or the big, you know, automakers laying off. What typically isn't reported is what's happening with smaller businesses that are laying off. You know, businesses that might lay off 2 people, 10 people, 20 people, 50 people, those typically go under the radar and are not reported. But think about how many small businesses are laying off people. And remember, small business is the backbone of America. If we don't have small businesses out there creating jobs, there's going to be a lot of unemployed people. And what's not being reported is the amount of layoffs that small businesses are having to do now. Another one from the hedge. Surprise! Fed says all big banks pass stress tests, face $541 billion losses in adverse scenario. So no shock that all these banks pass, even Credit Suisse pass. So I guess now we sit back and we wait for the next bank to blow up, and it will happen without a doubt. That is guaranteed. Take a look at what's happening to commercial real estate. And how many of these banks, especially regional banks, are so heavily invested in commercial real estate? We don't know how bad commercial real estate really is, but I think we're going to find out at some point next year. Remember that we had multiple banks go under globally this year, but 2 of them come to my mind. First Republic and Silicon Valley Bank. Didn't they pass their stress tests and then they blew up and they defaulted on billions of dollars? So what does the stress test even mean? What does it even mean? I think it means absolutely nothing. So we sit back and we just wait because more banks will blow up. Another article today coming from the hedge. General Mills becomes latest company to warn about faltering consumers. This is something that we have seen a lot over the past couple years. Price hikes fueling top line growth. Well, now price hikes are now no longer offsetting slower sales. The consumer, without a doubt, is pulling back. And before I forget, I went to a Walgreens today. I had to buy some shaving cream. And what was it, Barbasol? And it is noticeably, the can is so much smaller than it was a year ago. 7 ounces versus, I believe the old can was 11. The prices are literally almost, they're more than double than they were 2 to 3 years ago. And you're getting 4 to 5 ounces less of shaving cream. It is so noticeable. So today I looked at it, 7 ounces, and then I looked at a regular can of Gillette, and it was 11 ounces. That was like the old Barbasol size. So it had to be 11, 12 ounces. But whatever the case, you're getting a lot less and you're paying a lot more for the product. And the consumer now just cannot afford to pay more and get less. Consumer health is now cracking after more than 2 years of negative real wage growth, soaring credit card debt, and depleted personal savings. And we have the highest interest rates in I don't know how many years, but look at your average credit card interest rate now, about 21%. So, you know, you don't have to take my word for it. You don't have to take the word of an article or somebody reporting it on the news. When you go to the store, take a look for yourself. You know, take a look at, you know, how much bleach you're getting, how much shaving cream you're getting, how much cereal you're getting in the package versus what you were getting a year or 2 or 3 years ago. It is noticeably less, but the prices haven't come down. They're only going up. Here's one from Fox Business today, and this sounds like great news. Everything's coming back. Mortgage applications rise for third straight week. Great news. Applications are up 3% compared to the prior week. The bad news is that mortgage applications are down more than 20% compared to a year ago. That's a big number. Refis also up 3% week over week. Bad news is refis are down 32% year over year. And the question you have to ask yourself is, on these mortgage applications that people are getting, or taking out, how many of these people can actually be approved for a mortgage today? They can tell us that mortgage applications are skyrocketing, but how many of these people who are taking out these applications can actually get approved now, as banks have tightened up, prices have not come down enough, while mortgage rates are sitting, 30 years sitting near around 7% right now. But if you don't have 20% down, you don't have great credit, you're probably paying 8.25 today. How many people are going to be able to do that? I was reading a very interesting article today coming from wolfstreet.com. It's titled "The Most Splendid Housing Bubbles in America. June update, second overall year over year price drop since 2012. I want to go over some of these numbers with you, but there was a gentleman that wrote me a few days ago, and he said, JB, you're completely wrong about the real estate market. Look at the home builder stocks. They're exploding. To this gentleman, you do not base the health of the economy, nor do you base the health of the housing market on home building stocks or home builder stocks. There is no relationship now between the stock market and the economy. But again, you do not base the housing market on what home building stocks are doing. No way. Look at these numbers, look at this data right now. But you know, so many people want to base everything on a stock or what the stock market says. Completely wrong. Completely wrong. There is just no relationship. It is just a detachment now between the stock market and the reality of the economy. Completely detached. Do not base the housing market on what home building stocks are doing or home builder stocks. Do not do that. Look at the data. Year over year price declines keep getting longer. Prices are down in 10 of the 20 metro areas that the S&P CoreLogic Case-Shiller Price Index covers. Let's look at these numbers year over year. Seattle down 12.4%. The San Francisco Bay Area down 11.1%. Las Vegas down 6.6%. Phoenix 6.1%. San Diego down 5.6%. Portland 5.2%. Denver 4.5%. Los Angeles down 3.2%. Dallas 2.9%. Washington D.C. 0.5%. That's the reality of it. Prices in 19 of the 20 markets have dropped from their respective peaks. Those peaks were from May to July in 2022. Seattle down 12.9%. This is from their peaks. San Francisco Bay Area down 12%. Las Vegas down 9.9%. Phoenix 9.4%. Dallas 8.5%. San Diego 6.1%. Portland 6%. Denver 5.6%. LA 4.2%. Tampa down 3%. These are down from their respective highs. So we are really beginning to see things cool down. And as more and more people lose their jobs, forget about what interest rates or mortgage rates are doing to the housing market. Think about what job losses are doing to the housing market. Think about discretionary spending where people don't have money to rent these Airbnbs or these VRBOs from people who bought 2 or 3 or 4 or 5 houses. Now these people have, multiple mortgages. And if those homes are not being rented for the weekends or the holidays or over the summer, these people are in big trouble and they're going to have to sell these homes. So we're going to see big things, I think, happening in the next 6 to 12 months in the housing market. But again, just because home builder stocks are way up, that doesn't mean anything, at least in my opinion, to what's happening to the real estate market. Remember, home builders are flexible. They're savvy. They can throw in incentives. They can drop prices quick. They're down 20% over the last 6 months. So they're way ahead of the existing homeowner who's putting his house on the market, still thinking that, we're in 2022 or 2021. Those days are over, ladies and gentlemen, long gone. If you're in the market and thinking about selling your house, you better hurry. This is the time. I think you're running out of time to get out of this, but too many people will be greedy. They still think it's 2022. They're gonna overprice their house, sit for months and months and months, and then wonder why their house isn't selling. And then they'll drop it, but they won't drop it enough. And then before you know it, their house is on the market for 6 months, then 9 months, and 12 months. And they're just gonna continue to chase this market down. I watch areas of the US where I'm looking to move, and I look at what's happening. The sellers don't realize yet what is happening. And I start looking at how long some of these homes are staying on the market, and I'm looking at multiple price reductions. But guess what? They're chasing the market. If you want to be the next sale, you have to be the best deal on the block. You may have to make an aggressive price reduction. You have to get real in order for the home to sell. And too many people are going to realize that they were way too late and they did not price their home correctly, and they're sitting there greedy, still believing it's 2022, and it is not. And think about every day, week, month that goes by that house sits on the market, you're really losing money, because this market's going to continue to go down, and you're going to have more and more competition jumping into this market. More and more inventory is coming. We're not going to see less and less inventory. More is coming. The home builders are building a lot of houses. The VRBOs, the Airbnb people, they're going to be dumping homes into this market. Landlords are going to be dumping homes into this market. We have an aging population. Older people who are retiring, who want to downsize, who want to move, they're going to be dumping homes into this market. There's going to be a lot more competition coming. And then there's just going to be people who lose their jobs, period. They're going to lose their jobs, and they just cannot afford to live in these homes. And they're going to be dumping homes onto this market. So I'm going to stay with my plan. I'm going to be patient. I'm looking for a good deal. I'm not going to pay over value on anything. Most of all, a home, which is typically your biggest investment of your life. Do not overpay. I think right now things are still extremely overpriced. And I think people who obviously bought last year totally regret what they did. But if you bought in the last few years, I think you're going to really regret here, at least in the next 12 months, what you did, because as we begin to see used car prices coming down, I'm seeing more used cars hitting the lots. We're seeing all those repos hitting the car auctions. What do you think is going to happen to used car prices in 6 to 12 months, 6, 12, 18 months? Do you think they're going to be more than they are today? Absolutely not. They're coming down. Another article I want to share today, Citizens Bank users reports indicate possible problems at Citizens Bank. People reporting that mobile banking is down, online banking down, mobile login down. Comment down below. If you use Citizens Bank, have you experienced any problems? And again, this is another reminder that how much do you trust these banks? How much do you trust these stress tests? If you don't hold it, ladies and gentlemen, you don't own it. I think we're literally lied to every day about what's happening in housing. We're lied about unemployment. We're being lied about the jobs data. We're being lied about the health of the economy. We're being lied about so much. You have to use your own two eyes. You have to invest some time and absorb as much knowledge as you can. And you have to come to your own conclusions of what's going on here. Don't take the word of somebody wearing a $3,000 suit on one of these business channels every day who gets paid millions of dollars, to pump up these markets, or a real estate agent who earns their money by selling houses. They're always going to tell you it's a great time to buy. But why are so many of them quitting? Why are so many of them not selling properties? Why has the mortgage industry been absolutely destroyed? Why are banks laying off and have been laying off so many people in their mortgage departments? Why are we seeing mortgage applications down over 20%, refis down over 32% year over year? Why? Because people aren't buying houses. And when people aren't buying houses, people in the mortgage industry are getting absolutely destroyed. And they're going to really, really feel a lot of pain here over the next few years. WTI rallies after big crude draw. The administration drains SPR, Special Petroleum Reserves, for 13th week in a row. Just think about how all of this is so manipulated right now. Everything you see is so manipulated. The markets are manipulated. The real estate market, or the stock market's manipulated. The real estate market has been manipulated. When you have the Fed buying mortgage-backed securities and putting rates, under 3%, it's all manipulated. They created a massive bubble, a buying frenzy, all this FOMO. Pure manipulation. It wasn't because people were making more money, or because the job market was just off the hook and we were just witnessing an incredible booming economy. No, it was all artificial. We're going to continue to watch manipulation take place. In regards to the Special Petroleum Reserves, they dumped about 50-60% of our reserves onto the market in order to push gas prices down, in order to push the inflation down. Pure manipulation. This is artificial. Inflation didn't come down because things were getting better. Inflation's come down because they're able to push gas prices down, because we're dumping our SPR onto the market, pushing gas prices, 25, 30, 35% down, maybe more than what they should be. So if we weren't doing that, where would gas prices be right now? So where would inflation be right now? Because, inflation or gas prices are a big part of the inflation number. So where would inflation be right now if we really weren't manipulating and cheating the numbers by dumping our SPRs onto the market, which also really puts this country in danger? Because when you've used up 50% of your reserves, maybe more, how in the world are you prepared for an emergency? How are you prepared for a war when you're dumping all of your reserves into the market to push gas prices down? That's dangerous. That is really taking a huge risk. And then we can look at the manipulation where banks are, they don't want to take cars back. Why is that? Because they know that they're not going to get much of their money back on those loans. And this is all going to be exposed, pushing prices down. And then we're going to see big losses on the balance sheets when banks find out that, the car that they lent $100,000 on, well, when it went to the auction, they got 30. And maybe they can sell for 35 or 40. These are huge losses. How about commercial real estate? Banks don't want to take back these major hotels. They don't want to take back these office buildings, because once they have to unload this, they're going to show enormous losses on their balance sheets. You know, oh yeah, we made a $100 million loan on this mall and we sold it for, you know, 25, 30 mil, $70 million loss. This is going to be a big problem. And this is going to start exposing when they have to start taking this stuff back. They don't want to take it back now because they know exactly what it's going to do. It's going to expose massive losses, huge hemorrhaging on these balance sheets. And so they're reluctant to take back the cars. They're reluctant to take back the commercial real estate. They don't want to do it because once they have to start unloading this stuff, we're all going to see, the public's going to see big losses, and we're going to see big problems with a lot of banks, especially the regional banks. I want to close on these last two articles, both coming from the New York Post. Again, I want to remind everybody to make sure that your security is in order, that you are preparing, that you use situational awareness, that you are aware of your environment. Woman stabbed in the head by 4 teens, another placed in headlock. She is in stable condition. This took place in Brooklyn on a train on Monday. So teenagers stabbing a woman in the head. Isn't that wonderful? Here's another one. Video. I watched this video. This is incredible. Right here. Now you could say, oh, that's in New York. That's terrible. Well, how about right here in Thousand Oaks, California, 1:45 p.m. A couple days ago. A gentleman comes into a restaurant through the back door, and there's some workers in the kitchen. He grabs a knife. He's got lighter fluid and a lighter, and he's threatening to light people on fire and burn the restaurant down. Luckily, a good Samaritan stepped in, knocked this guy out, and he was arrested. Not the Good Samaritan, thank God, but the suspect who threatened to light people on fire and burn down the restaurant at 1:45 p.m., Thousand Oaks, California. I believe this was on Monday or Tuesday. So this the suspect will be charged with attempted murder, dousing people with the lighter fluid or whatever was in it, gasoline, and threatening to light them on fire. So here you are working, cooking at a restaurant. Somebody comes in the back door. And by the way, this gentleman, the suspect, had a little dog with him on a leash, walking around with lighter fluid, a knife, and matches, threatening to light people on fire and burn the restaurant down. It's incredible. So it's not just in New York. It's happening right here in beautiful Thousand Oaks, California. It's happening everywhere. And how many people at work are thinking that, oh yeah, somebody might just come in and with a knife and some gasoline and threaten to burn us down? Not most. You have to be awake and aware, ladies and gentlemen. You know, that gentleman the other day that said, oh, you're always telling us how bad it is, but you don't have any solutions. Again, let me reiterate the solution. Number one of the things you can do, it's extremely cheap, it costs absolutely nothing. Exercise situational awareness. Know your environment. Know who's around you. Know who's coming in and out of those doors. Know where the exits are. Be prepared. Be prepared. Another thing too, to this gentleman, and I'm not picking on him, so don't take it the wrong way, but people don't want to think for themselves. Maybe you got to start thinking for yourself. What can I do to be less of a victim, less of a statistic? What can I do to put the odds in my favor? What can I do to be a stronger person? One thing that I would recommend at the close of this video is, go learn some self-defense. There's some more advice for you today, because a lot of people just will not think for themselves, and a lot of people expect me to have all the answers. Let me tell you, I don't have all the answers. I'm thinking out loud. I have some of the answers. Many of you have a lot more answers than me. Many of you are a lot more prepared than I am. But I'm trying to do the best that I can. But one thing, I'm not going to blame somebody else because they don't have all the answers. I mean, wake up and start thinking for yourself. There's more advice for you today. So to this gentleman, begin to think for yourself. Use situational awareness. Go take some self-defense. It could be Muay Thai, it could be Jiu-Jitsu, it could be boxing. Do something to put the odds in your favor. I can't think for everybody. I don't have all the answers. Never said I did. But first off, we have to expose what the problems are. And then we all have to begin to critically think for ourselves, what can I do to avoid being in a situation like that? And what can I do if I'm in that situation? What would I do? How would I protect myself? How would I get away? So things to think about, because this stuff is happening every day at people's homes, at the mall, the grocery store, at people's work, you name it. It's happening at the bus stop. It's happening in the subways. It's happening everywhere. So make sure that you are aware of your surroundings, of your environment. I'm going to leave it there today. I don't want to rant. Thank you so much for tuning in. Please comment down below. Any ideas for preparations? What more can we do to not be a victim? What can we do to put the odds in our favor so that we can avoid these type of situations? And if we are in a situation, what's your advice? What are you doing to be a better, stronger, more prepared person in case you come across a situation like this in your own life? Or maybe you've already come into a situation. Maybe it's already happened to you. What did you do to get through it? What did you do to win? So I'm going to wrap it up right there today. As always, I look forward to speaking with each and every one of you. Be careful out there. Be safe. Pray for this country. God bless every one of you. Please make sure to like, subscribe, share this video. Talk to all of you very, very soon.